start the recording. Thank you very much. Good morning, Coldwell Banker George. How are you today? Wonderful morning. A little bit of on the overcast, but it's a good temperature. And actually, it's kind of unusual that at this time we're still pretty warm still. Usually around this time every year we'll experience some chilly weather already. And this week will be a Halloween day, and most of the time of Halloween is the day that we go out and on a cold evening and trick-or-treating. But anyway, as I was talking to a friend just a minute ago, the interest rate is creeping up to 7% again. Kind of I don't know what happened, but but what he said is right. You can't just look at the interest rate. You have to look at the timing. And actually the timing for buying property is not too bad right now, because if after the election, usually seven out of 8 times after the election, the price of the real estate will go up. And by the time that the real estate go up, it's a little bit too late already, to chase after the interest rate. So, as we always say, you date the interest rate, but marry the house, right? So, you can always refinance the house and later on. So don't let that discourage you. Go out and tell your client, hey, it's just as good a time to buy as any other time. And don't just put too much emphasis on the interest rate itself. Okay, and it will time correct itself, and then you still will be catching it at a good time. So I hope you're doing your diligence at this time, because we only have 1 more month to go. We get effectively for until the end of the year. By December, no one is doing any work. Okay, that's what it is in the real estate market. So you really have 1 more month, and so if you haven't met your goal, this is the time to wrap it up. Okay, so let's do it. Okay, with that, I would like to start with introducing all the affiliates. And you know that Alba Moy is our affiliate spotlight today, and she's going to tell you all about the transfer tax, the probate, and how to manage your deal with the trust is the entity. So it'll be a lot of good information. So looking forward to that. But before that, I would like to introduce other affiliates, and so let's start with Frank. Frank, how are you? You're on.
Hey, I'm the first one. All right.
Yeah.
Good morning. Happy Monday, everybody. It's a wonderful thing to just be present, be alive, be out there. You have to just always be grateful for everything you have. Be thankful for what you have. Be grateful for the opportunity you have to move forward and provide that to your clients, because if you don't, somebody else will. And then that puts you away. So always have that sense of positivity. Positivity wins in every case. You may not think so, but it sure does work sooner or later. I wanted to also help, highlight Alba, where Alba has been an escrow officer for many years. I don't know how she still looks like she's 27 years old. But one thing of Alba my cousin was a loan officer from Bank of America. Her name was Teresa Soltero. And I'm sure Alba knows about her. Since the 90s, helped my sister and my family buy homes as a lender. And Alba was always the escrow officer. So, sometimes people leave the business, but not Alba. Alba is there. And that's what makes her so great, that she's here for history and consistency and seasoning. So kudos to you, Alba.
Thank you. Thank you, Frank.
Thank you, Frank. Thank you for your good word for Alba.
Yeah.
I appreciate that. Okay, Nancy, how are you today? You're always so punctual.
I am very punctual. I try. My father taught me well.
Okay, good.
And our office told us we should be 10 to 15 minutes early. I think right now we're all thinking about the holidays, but it is the time to reach out to your clients. Even though it's the holidays, that's the time to reach out to your sphere of influence. Talk to them about your holidays, talk to them about their what they're doing with their financial plan. There's going to be a lot of questions because I think Frank and we all know when you call somebody, they're going to say, "What's the interest rate? How's the market?" I went to just a simple party and everybody said, "How are you doing? How's your real estate? How's the market?" I didn't even say anything. That's their conversation. So if you reach out to your friends, your old clients, I mean, Alvin and I are doing third generation business. So that doesn't mean your old client cannot give you business because I just closed an escrow for one of my friend's son that just got become a physician, and they got a physician professional loan and they closed escrow on a $1.8 million house, which is pretty good. So I think, I kept in touch with them because we've been friends, but I'm not the best at it, I have to admit. But so don't do what I do. Don't wait for them to call you. You should call them first. And if you do need a business plan, you need advice, you need tips, yeah, go ahead and call me. I will be happy to share my experience with you, just like Alba, just like Peter, just like everybody else has been in business a long time. So thank you so much, Peter, for your support, and I'll have a great week.
Thank you for your support. You're always very supportive to Co-Banker George. I appreciate that for all these years. Wonderful. Thank you. Brandon, how are you today, Brandon?
I'm doing wonderful, Peter. Thanks. I was also going to say ditto to what everyone said about Alba and just how important escrow is in the process. And we always say that on the NHD side because disclosures are such a big part of it. And the escrow team's always in Alba is always the best at putting everything together and making sure that you guys have the disclosures when you need them. Something that I was going to say that just came up last week, when it comes to whether or not you as the buyer side can order the NHD, you can absolutely order the buyers on the buyer side the NHD. You just want to make sure that you discuss that with the seller. If the seller says, buyer to choose the NHD, that's where you can have that opportunity. And then on the seller side, don't forget that the NHD you can always order before you get to escrow, and make sure that you have the fire hardening defensible space form filled out. And if you need to get anything done prior to escrow on the NHD side, like the supplemental taxes, you want to make sure that you calculate. Those are all things I always suggest to do early so that by the time you get to escrow, when escrow is putting everything together, we can just send them the NHD report and all that information. It's all done ahead of time. And then we're not scrambling at the end to make sure that if there is, say, a PACE lien on the property, that payoff amount. Alba knows that payoff amount early. And the earlier you get that done, the easier or the smoother the closing. And that's what we want every time. Call me if you have any questions or you need help on any of that. I'm always available. Everyone have a fantastic week.
Brandon, you mentioned that the buyer can choose to for the report, right? But
yes,
the seller still will need to pay for it, right?
So the seller pays for it typically in escrow, but that's sometimes negotiated. So that's one thing. The NHD, there's so much that can be negotiated, whether it's they're getting the inspection right, or if they're going to order that fire hardening or the Fortress fire report, they can do that. Buyers can also pay for the NHD. It doesn't have to be that way. It's typically the seller, but this is where a lot of agents don't realize there's a lot of it can go either one way or the other way on the NHD. But when it comes to ordering it earlier, that's what I always suggest, because our policy in most NHD companies, you can cancel if it doesn't close. So the earlier you get that information, it's just going to make it smoother, and it's not going to be, a rush at the end when we get to escrow. And escrow already has to deal with so much. We want the NHD to already be taken care of.
Yeah, well, there's not much leeway on the report of the NHD, right? So what is the advantage of having the buyer dictate which company you buy the NHD from?
The big thing is really that if it's not requested, and I've seen this came up this week, that it wasn't requested and it was just buyer's option. So that on the listing side, if the listing agent and you're representing the buyer doesn't really care, didn't order the NHD report, that's where it would be smart to come in as early as possible to make sure that everything is clear.
Yeah, but NHD is one of the requirement of the CBGR.
It is.
So it
So, but if you guys are
around.
if it's not CBGR on the other side, that's what I'm saying, that
I see.
your policy is that your office, but not every office is like that. And I've seen that with a bunch of my offices. The offices that have those policies, they're getting that the RPA, and it says, buyer to choose NHD. And in that case, request it, get that as early as possible in the transaction, in escrow, because the earlier you get it, the less headaches.
I see. It makes sense. Makes sense. Thank you.
Yep.
Good suggestion. Okay, the next Angie Tang, First American Title. How are you, Angie?
Very good. Thank you. Good morning, everyone. Good morning, CBG. Just wanted to let you guys know that we will be celebrating with you guys for Halloween. If Brandon needs anything,
Good.
Brandon and I believe Sandy is on call too, will be there supporting CBG. And also just keep in mind that with First American, we can go up to 15 million in underwriting through our office in Glendale. It doesn't have to go get a second layer of approval like most other title companies. So if you need an extra set of eyes, or you just you have a big construction project coming up, please know that we can handle up to 15 million through our direct underwriter from our Glendale office. So we're here to help you grow your business and secure it. Like everyone was saying, talk about farming. We are able to do labels too, in case you wanted to get out those Christmas cards. We can do that as well for you guys. Thank you so much. Angie Tang, First American. Thanks, Peter.
Thank you. Nice to know that. Thank you very much.
Thank you.
Okay, Sandy, how are you, Sandy?
Okay, I guess I'm batting cleanup for First American, so I'm just going to jump on.
Okay.
Do not make Alba order your home warranty. Let me do that. Okay. She's got enough to do. She's a busy woman. Better if home warranty orders home warranty, right? She's got enough to make sure that we all get done. She doesn't need to be making sure that the home warranty gets ordered. So, and that way also you can make sure with me that we order the right thing. And it's one less thing for you to have to make her worry about. From now on and going forward, please know that I'm going to ask for the buyer's name, email, and phone number. Okay. And there's a couple of reasons for this. First of all, First American doesn't sell your information. Title, NHD, home warranty. We don't sell your information. We don't need to. You're already our customers. We don't sell it. So, but the important thing is when your clients who are the buyers call into the home warranty from the phone number on record, it finds their contract for them and says, oh, we show you're calling from 1234 Main Street. If that's correct, please press 1. That will save them on average a lifetime on the phone with service. Okay. So don't be afraid to give us their phone number. We're not going to sell them anything. They've already got a home warranty. Hopefully they've already got title and NHD. We're not selling any of their products. But the biggest thing is we're now doing welcome calls in California. After escrow closes, after we receive payment, we have a team of people who are calling homeowners in California and welcoming them to First American and explaining how their home warranty works. And if we do that, we have shown that they will renew their warranty exponentially at a greater rate for us, something like 3 or 4 times more likely to renew their home warranty. And it's really simple because they know they have one, right? Escrow can be confusing for first-time home buyers. They may close escrow, live in their house for a year, and never know they've had a warranty. If I don't have their email address, they're never getting an email. We mail them stuff, looks like junk mail, they may throw it away. If they don't use it, it has no value. Right? It literally has no value if you don't use it. If they know that they have it and this welcome call happens and they know how to use it and they use it, they renew it. It's simple. So I'm going to ask, push back all you want. I'm going to ask for email and phone number, and it's for the betterment of your client's home warranty experience. It is not to sell them anything. Okay, so keep that in mind. See you Friday. I've got a great costume. Cannot wait. Or Thursday. Can't wait.
Yeah. Not Friday. Okay.
Yeah, Thursday. I'll see you guys then.
All right. Thank you, Sandy. Looking forward to that. Thank you very much. All right, Mark, how are you, Mark?
Good morning. I'm doing well, thank you. Good morning, everybody. Mark Wu here with the AMS Insurance Agency. I'm here to assist you guys. I've been a part of the industry for 35 years and known Alba most of that time, and so don't give her extra work by having your buyers not be able to look for insurance or acquire insurance, and then you have to extend the escrow. So that happened to me with a Coldwell Banker agent that frantically called me last week. Said the buyer said no problem. Buyer assumed they could assume the policy, and then the buyer's current agent with another company, like a good neighbor one, wasn't that good for him, and so they were about to fall out of escrow, and they were in a panic. But I could get you insurance solutions. It might not be at the greatest price, but it is what it is. Right now, just to let you know, many companies are jumping off commercial policies, especially apartments. So you might have buyers or perhaps sellers that might own investment property. And so that might be a way to just get in the door and talk to them. You got to be proactive in this industry. One of the things, I heard you guys talking about rates. And if you've been in this business a long time, as Alba can attest to, when the rates are high, the competition is low. So when the rates are low, the competition is fierce. So you've got to show the positive aspect of being on the flip side of the coin, so that you could assure those buyers that, hey, you know what, the rates are high now, but we can at least not deal with 50 offers, but few offers, and then we have a chance to buy the home. And again, you need insurance to bind it. So anyways, my tip for the day, Alba, you can have a fabulous time taking it away, teaching the CBGR friends.
Thank you.
Thank you, Mark. I think as far as the insurance concerned, we can be a little bit proactive, because a lot of carriers are looking for the updated electrical panel now. So this is one of the requirement that they will renew the policy or have to send a new policy. So if you have an old building older than 15 years old, chances are that your electrical panel is not up to date. So you might as well just update it first before you shop for insurance, right, Mark?
That is absolutely correct. Be proactive, and even if you can be proactive in the initial buying. So when you get an offer accepted, or even if you're the listing agent, be proactive, because I am telling you, people are finding out, hey, there's issues like they don't have updated electrical panels or whatever. There's a claim on the policy, and then you don't want delays in this day and age, because it could cost them a rate lock. It could cost them whatever that may be. So have people on your team. Hopefully, if you give me the privilege, I always answer, even when I'm traveling. Thank you.
Okay, thank you. Thank you so much, Mark. Okay, I think that's all the affiliates. Is there any latecomer or somebody I missed? Please speak up. Okay, I think that's it. Then let me introduce Alba Moy, our affiliate spotlight today. As I said, that Alba has a lot of good information for us with probate, the transfer tax, and trust instruments and stuff like that. So Alba, take it away, please.
Thank you, Peter. Thank you, everybody. Thank you for giving me so much love and all the great, I get nervous, so I'll try not to speak so fast. I'm Alba Moy from Moy Escrow in Alhambra. I am just 2 blocks away from the Alhambra office. I have been doing escrows for 45 years, and I love it. I'm passionate about it. I am very thankful to be married, because I'm always such on my, working about escrows and thinking about escrows and dreaming about escrows. And we have a friendly staff, and we're always welcome for you guys to stop by and your clients to stop by. And we have a goal. We do not allow anybody to leave our office unless they're happy. So if you need somebody to be positive, to be, to give you a pep talk and a pat on the back, I am the one. And also, I'm great with estimates. and they're very lucky estimates, so you can get your listings and your sellers will be thrilled. Regarding the transactions, there's an IRS withholding if a person is a foreign seller. So there's a 15% withholding for sales of a transaction on the sales price if the seller is a foreign person. And for franchise tax we're withholding, there's a 3.333% for the franchise tax board. And that's for any non-owner occupied property. So even if the seller is not a foreign person, there's a withholding if it's a non-owner occupied property. So this is the law, it's a requirement. The franchise tax board made it into law because a lot of the investors were not paying their taxes and they were just moving out of state or leaving the country. So Governor Davis squeezed that law into effect many years ago. And if the seller wants to have a lesser withholding, then they need to fill out anyway the 593 form for the franchise tax board and for any lesser withholding if applicable. If there's no withholding, if there's a zero gain or loss on the sale of a transaction. So that's keep that in mind. If the seller is doing a 1031 exchange, there's no withholding for the franchise tax board for foreign person or for residents, or U.S. citizens. But if you are a foreign person, even if you're doing a 1031 exchange, you still have to pay the 15% withholding. It applies for the 15% for the IRS. And so keep that in mind because the IRS needs their 15% withholding. I always say it's only a withholding, so it's not a payment that you have to really pay, but we have to withhold it and send it to the franchise tax board. When the seller does their taxes with their accountant, then the accountant will determine whether they need to pay or not. If they don't need to pay, then they'll get a refund. So, whenever, they file their taxes. Regarding probate sales, if an executor of the estate or administrator of the estate has limited power authority, then you need to have court confirmation. If the executor or administrator of the estate has full authority, there's just no court confirmation required. And keep in mind, there will be letters of testamentary, letters of administration. Whenever you see the word letters, you need to make sure that there's going to be a notice of proposed action that needs to be filed. So it's a requirement. So that because the beneficiaries, the heirs, they have 15 days to object to the sale. And unless they sign a waiver, but sometimes there's like 15 beneficiaries and somebody always, will not agree to something. So that's one of the things to have to remember, the notice of the notice of proposed action. And when you have a property in a trust, it's a living trust, and we'll talk about revocable living trust. The revocable living trust becomes irrevocable when the parties, the trustors, the parties who created the trust pass away. So if there's a husband and wife, if the wife is alive and the husband passes away, then the wife is a successor surviving trustee of the trust. So then she can sign everything, use her social security number and everything for the tax ID information. But if both of them have passed away, then you need to get an EIN number, which is an employee identification number, which you can get it from the Treasury Department. You cannot use the social security number when a person passes away. And escrow will require a copy of the trust. We will also prepare a certification of trust, so that way, the most updated one. And if both parties are deceased or just one, we need to still prepare the affidavit death of trustee for the chain of title. We'll need a certified copy of the death certificate. I always say original death certificate. Once we record that, it will mail back to the client. So, but that's, it's for a chain of title procedure. And if you want to buy a property under trust, just remember, you need to have the trustee name as trustee of the name of the trust, because you cannot hold title just in the name of the trust. Okay, the entity in itself cannot hold title. So a lot of the times when you have a prelim report and they don't show a trustee, but they only show the name of the trust, actually that is not a proper transfer to a trust. So what I will do is that we can still use it, but we would say who acquired title of that. So let be John Smith, trustee of the ABC Trust, so John Smith and Mary Street Smith Trust, and sometimes they have a date established, whatever the date, and then I'll put down who acquired title as the name just without the trustee, and that will fly with the title insurance company. So that's something for you to know. Make sure that you get a copy of the trust, because sometimes there's more than one trustee. Sometimes the spouse passes away, and then the surviving spouse, they need to be co-trustee with the child or the next person in line or whatever. Some trusts, they have multiple trustees, and they're like co-trustees, 3 or 4 or 5, and it's so exciting because they each have attorneys, they don't trust each other. So we have a very exciting transaction when it comes to that. But I love them all. So we just go through it and navigate through it and just let it close. Closing in escrow is so exciting. It's amazing when you see the client so happy in their home, the seller get their money, the realtor gets their commission, and of course we collect our fee. So that's it's always fun time. Opening in escrow is very exciting. There's no such thing as too small of a transaction or too big of a transaction. Every single transaction is important. And I wanted to also talk about property tax proration. Everybody's getting the property tax bills right now. So the new tax bill, the fiscal year for the property taxes is from July 1st, 2024 to June 30th, 2025. So the first installment, it needs to be paid by November 1st, but become delinquent by December 10th. So when we close escrow, what we'll do is we charge the seller for the 6 months, and then we'll prorate it from the close of escrow to December 31st or January 1st. And that way, because sometimes the seller pays the property taxes early, and when they get a refund, if we pay it through escrow and if we get a refund, then we know who to refund it to. And the second half taxes covers from January 1st, 2025 to July 1st, 2025. So we'll do the same thing. It's due February the 1st and becomes delinquent on April 10th. So keep those dates in mind, because the penalty is very expensive. And so that's and also advise to buyers that they're going to receive a supplemental tax bill within the first 6 months to a year from the purchase of the transaction. And when a person passes away also on the seller side, they're going to also receive a supplemental tax bill. So keep that in mind. If they have a trust, make sure that they hold enough money in the account, so that way they will have funds to pay for when the bills are come. Because if they don't, if you release all the money to the beneficiaries, they're not going to give you $1 back. As a matter of fact, they're going to just ignore you. And as a trustee, you're responsible. So for property taxes, they're going to put it under you, and secure taxes under your name as trustee of the trust. But when you do your own, when you have a transaction like that, if you do your own refinance and if you have it lien against that, it would show under your name. So that way you have to take care of it. Make sure that when you have a trust, you have a seller open a bank account under their trust, because when the proceeds are transfer, wire, whatever, we need to wire to the account of in the name of the trust. So it cannot be in their individual name. So that's why they have a trust. They're protected under the trust. So that's important for you to know. But it's not important to close. I mean, they can still set up the account after we close the escrow, and that's not going to hold the closing. And I also learned something that I'm going to share with you, that child support liens are for life. I got an insight from that attorney from the child support department. He says, if you're 65, 70, 80, 85, it's going to show. But of course, if it's clear, they will show the release also, but it will show that you have a tax lien. I just recently closed an escrow where the seller had a child support lien for $200,000+. So it was very, very shocking, but we still had to pay it because the seller, supposedly the seller said there was no money owed, but because the child support office made mistakes on the inputting, whatever they withheld from his child for the child support, they were refunding it back to him within 2 weeks. But he never questioned it. So when we time to close escrow, he had to pay. It got up to about 219,000 or something like that. So remember, that's for life. Okay. And any questions?
Alba, now you mentioned that the executor, when you have a probate, the executor, if the executor has a limited power, they have to report to the judge. And but how do you know that he only has a limited power?
Because you're going to get a copy of the letters of testamentary, and he will say such and such a name is the executor or administrator of the estate, and he will say with full authority or limited authority. So when you see the word limited, when you see the limited word, you need to have for confirmation. And
but when you have a will, when you set up the will and set up an executor in the will, then how do they determine whether it's a limited power or a full power?
Well, if there is a will, I think that when they need to go to the attorney, and the attorney will review the documentation, and they will determine, because they can have to get the letters of administration or letters of testamentary.
I see.
So every one of those. If you have a child who is 18 years old or under, do not put property under their name, because they cannot sign until they're 18.
Right,
you're going to have to get a court conservatorship to allow, a guardian to sign on their behalf.
Right. Okay, thank you.
You're welcome.
Alba, this is Buddy. I got another question regarding the, you mentioned about for life. It is recorded as far as you have any child support.
Right.
Can you please clarify that?
What I mean is that when a person has a child support lien, that lien is for life. That's what they told me. But sometimes, but of course, if you're 85 years old, unless you are Al Pacino or something like that, you most of the time you have a release. So they're gonna file the release and they're gonna look for the release. But if they owe it, they're gonna pay it. So can you imagine an 85-year-old with child support? I had a 70-year-old who had a child support lien, and he was active. I don't know, he was very,
Okay.
He was very
paid, it will show on your records for life.
Yes, the child support department says that it shows for life.
Unless you get a release of payment, right?
Right. It will show the release if you have a release, but but as soon as they see that name, it will pop up every time.
Oh, okay. Even if it's paid, it's still
even if it's paid. Yes.
Okay, got it. Thank you.
You're welcome.
Okay, I have a comment on the when you have the second spouse die, and when you file the affidavit of death of the trustee,
right?
And at the same time, you better file the exemption too if the kids are entitled to exemption. Otherwise, the assessor's office will reassess your property automatically, and then it will take you a long time to correct that.
Right.
I make the mistake when my mother died, and it took me at least 3 to 4 months to correct that. But anyway, it's a good thing that it was retroactive, so that when they corrected, they refunded me the money. But so when you had the second trustee died, when you filed the affidavit of death of trustee, remember to do the exemption, parent to child exemption at the same time, to avoid the assessment.
Correct. Yeah, usually that the attorneys will prepare that documentation.
Yeah,
usually.
Right. Okay. Any more questions for Alba? Alba, very good information, very precise and very useful.
Thank you, Peter. Yeah. Thank you, Michelle. Thank you, everybody. Thank you for allowing me to be part of your team. You are amazing. So just go and get it. Okay.
Right.
Go do business.
You're right. A closing of escrow is a very happy occasion. That's why I always look forward to seeing you in the office delivering the check.
Yes. When you see me, that means I'm delivering money right away.
That's good. Thank you, Alma.
Thank you so much.
All right. Thank you so much. Okay. And any more comments from the agents? I do have a few announcements to make before we go into the regular business. And as you know, we have lunch and learn this Wednesday. Is from the Charles Schwab, and they'll tell us some mortgage system they have that we can help you, finance the purchase of property. It's very informational and very practical, and they're one of the top brokerage firm in the nation. So yeah, I recommend that everybody will attend this lunch and learn. It'll be very, very useful. So it's Wednesday at 1 o'clock, lunch and learn. Thursday, as you know, is our Halloween party. Everybody's invited, including the affiliates, and we have a lot of RSVP already. It's going to be a very good party. I'm really expecting a lot of turnouts, and we'll have a good time. And if you have a costume, bring it in and dress up. Okay, it's not a requirement, but if you do have a costume, it will be more fun. Okay, and then on Friday training, Michelle is going to touch back on the disclosure forms. She did a couple weeks ago with the disclosures, and some she found out that some agents are still not sure about all the disclosures. So she's going to come back and touch up on the disclosure forms and make sure that everybody understands. And then after that, she will go into commercial leasing with the AIR form. Remember that last week we did it with the CAR form, but 2 weeks from now, or 2 weeks from the Friday, it will be on the form AIR forms and commercial leasing. So commercial leasing is pretty lucrative. Lucrative income revenue if you do it right, okay? Because most of the commercial leases are pretty high volume. So and that will be 2 weeks from now. Actually, it will be Friday after this coming Friday. Okay, and do you have anything to add, Michelle, as far as announcements concerned?
No, that sounds great. Thank you. Okay,
very good. Thank you. And at this time, I would like to call Doug Meyer. How's Arcadia office doing?
Booming.
Good.
We're booming over here. Okay. This last week, we got 4 new listings and 5 new sales. The listings, we have a mixed use commercial Arthur He brought in on 9041 Valley Boulevard in Rosemead. It's a mixed use for $1,480,000. We also have a residential lease on Prospect in San Gabriel, 2-bedroom, 1-bath, $2,350, Amy Wang. Also, Arthur He has another commercial listing in San Gabriel, also in Valley, 9049 Valley Boulevard, San Gabriel, mixed use, $1,380,000. And Alma Aguilar, wow, she listed a house on Laguna Beach. Nice. It actually could be 2 units too. It's a 4-bedroom, 2-bath for $3,150,000. So it's never too far away to sell property, guys. Okay, you got a license for California, so okay. We have 5 sales here, and they're all sales. In Chino Hills on Cannon Lane, Helen Lee had a buyer for $1,935,000. Vicky Ching has a buyer in Los Angeles on Echo Park for $1,068,000. Nick Borelli in Clovis, California. I don't know where Clovis is. I think it's up by Sacramento. It's far away, but anyway, he still sold it. $375,000. And Alma Aguilar had a listing that sold on La Madera and Almani for $745,000. And our last sale is in Wisconsin. I'm not sure how that works out, but Mike Radovich, a sale for $1,200,000. So things are booming here, Peter.
Good to know that.
Everybody's working. Everybody's happy.
Yeah, good. Well, for the our Hembrow office, we are booming too.
Good,
I
great.
have some good news for you, but some of the deals are confidential, so I'm not privileged to disclose it yet until it can close. Definitely can close. But anyway, for the we have six listing and 5 sales. But the one that I'm privileged to disclose for the listing only have 3. The first one is 1.93 million for commercial lease for Shimei Cam for the property at Baldwin Park. And the next one is Nina Shi for condo of $1.05 million in Monterey Park. And another one by Shimei Cam is also commercial lease for $7,104 per month. So Shimei Cam is doing a lot of commercial leasing, as you know, and those commercial leasing sometimes can be very lucrative. So if I might encourage you to go into commercial lease, is one of the things that you should consider. Okay, and for sales, we have 3 sales. Actually, the one that I'm privileged to announce that only two sales. One is by Shimei Cam at $1.938 million for and then double-ended it too, so that's good. And then Nina Shi has residential condo for $1.005 million in Monterey Park. So, well, as I said, we are also doing pretty good in our Hembrow office, and the ones that is confidential are big deals too. So I will give you a pleasant surprise when that times come when I can announce those sales and listings. Okay, and that's all the listing and the sales. Do we have any supplemental listing and sales to announce, or reduction in price, or anything from the agents that need to you want to prophesize? Seems pretty quiet today, huh? Everybody seems to be pretty quiet. Okay, so if not, then I would like to share something with you. I hope this is useful. And it is, where is that at? Okay, there you go. And what I'm going to share you is what I have revisit to the Proposition 19. As you know, that in California, there's 35.7% of the population's over 55 years old. When they become at 55, and in terms of the housing tax wise, they are classified as a senior citizen. So all these people, if they are thinking about exchanging the property, step up the property, or transferring the property to kids, they're worrying about whether the home will be reassessed or not, or whether they will have capital gain, or whether that they can pass to their kids tax-free, right? All these questions that can makes them hesitate to move, or to sell the property or transfer the properties. So when you're dealing with those people, you have to understand what the situation is, and you have to understand what their options are. And the Proposition 19 is very critical and very important when you do the tax planning for them. I don't recommend that you recommend, you represent to them that you're a tax expert, but at least you kind of tell them a little bit about the Proposition 19, so that they can have a little idea of what they are facing. And but you always recommend them to consult their CPA as far as the tax situation is concerned, because everyone's tax situation is different. So, but then anyway, I'm going to revisit the Proposition 19 in a very simple way, so that you can explain your to your clients, or what the Proposition 19 will affect their property transfers. Okay, so as you know, there are two components in the Proposition 19. The first one is the transfer of the tax base. When the senior citizens exchange for their residence, or step up the residence to a new replacement. And the other one is parent-child exemption. You know, if they want to, when they die, when they want to pass it to the kids, whether they can be tax exempt or not. Now, for the parent-child exemption, before the Proposition 19, it is unlimited. That means, you know, if you have a mansion, $5 million or $10 million, everything, the transfer will be tax-free in terms of assessment. Okay, in other words, when you pass the property to the kids, they won't, they will not face a reassessment of the property tax, and which is a big benefit, you know, because most of the time those houses are under the Proposition 13 limitation, so their base is very low. And then if you can transfer that to the kids with the low assessment value, that's to their advantage. And before, you know, it's unlimited transfer. But the thing is, if it is not a prior principal residence, you can only have $1 million exemption for all the transfer of the property. In other words, you have investment property, altogether, the aggregate amount is $1 million. The assessments are free. Anything that's over $1 million is subject to the reassessments. And also, the recipient is not required to live in the property. But after the Proposition 19, then the amount is not unlimited. The amount is limited to the taxable value, which is what your present base value is, plus $1 million. You can transfer up to that amount without triggering any assessments. But if you're over that amount, then the excess will be added back to the base, and then it will be the new assessment value for that property. But then there will be no reassessment exclusion for transfer of property other than the principal resident, meaning that if the properties are commercial or investment property, there's no exemption at all. So you lose that $1 million assessment exemption. And also the recipient is required to live in the property and must have a homeowner's exemption filed within 1 year of transfer in order to qualify for this exclusion. In other words, the kid itself has to file the homeowner's exemption, and then they have to live in that property within 1 year of the transfer. So that is a pretty big requirement, because the kid has to, after they got the property, they have to live there as their primary residence. And then the other aspect of the Proposition 19 is the transfer of the tax base for senior. Now, before, you can only transfer up to the current market value of the property. In other words, if your present fair market value of the residence is $1 million, then you can replace that with the new property that is $1 million or less. And you cannot do that any bigger than that. And also, you can only do it once. And also, that is only valid in all the participating counties. Not all the California counties are participating in the transfer base for senior before that Proposition 19. And there are 58 counties in California, and only 38 of them are eligible for this transfer before the Proposition 19. But after the Proposition 19, all the all the counties are eligible now. So in other words, you can transfer your tax base from Los Angeles County to any county within the California, and you'll be eligible for that. And then the eligibility is not subject to the value comparison of the properties. In other words, you can have exemptions more than the fair market value of your present residence. But if there's anything that over the fair market value of the one that they're living in, then the rest has to be added back to the base, which I'll show you the calculations later. And also the benefits can be used 3 times. Remember that before you can only use it once, but now you can use the exemption 3 times in your lifetime. So that's 3 times as much. So that's a good Proposition 19. But there's a drawback, in terms of a parent-child exemption, which I will explain later. Okay, now in order to qualify the Proposition 19 parent-child exemption, you have to file the homeowner's exemption and reside in the family home within 1 year of the transfer. So if you want to do that, you have to go to the website, which is listed here. Just for your reference, and within 1 year of transfer, you have to register as a primary residence for that property. And then what if the house is cost more than the fair market value of the current property that you are living in? Yeah, you can transfer that, but what exceeds the fair market value of the current property has to be added back to the base of the current property to become the new assessed value of the new property. Okay, so and then also you can make the claim 3 times. Now, if you and that's another component of the Proposition 19 is they give the exemption for the disaster victims. So if your house gets burned in a fire, you're eligible for the transferring the property base to a new property if you're 55 years old. You don't even have to be 55 years old. It can be any age, but that you are the victim suffering from those disaster. And also you can do it more than once. If you within 1 year you encounter twice the disaster of fire, you can do it more than once. So that's unfortunately, man, I hope that won't happen to you, but if it does happen to you, yes, you can do it more than once. So that is one of the provision of this Proposition 19. Okay, let's do the parent-child transfer exclusion. As I mentioned earlier, then you can transfer your base for the up to the taxable value of the current house plus $1 million. So in other words, if your taxable value is $500,000, you can transfer the value of the property up to $1.5 million for the new property. In other words, you can buy a property at $1.5 million and without the worry of having to pay more the property tax. And so if it is over the $1.5 million, and then you have to the excess has to be added back to the current taxable value and become the new assessed value of the replacement property. Okay, so let's do the calculation now. So for example, if you have a taxable value of 425,738. Now the taxable value is not the same as the fair market value, okay? The fair market value may have maybe $1 million, but your taxable value is only 425,738 dollars. So and then you want to buy a property with a fair market value, a new replacement property, $1.75 million. So then the first step you have to do is to calculate the sum of taxable value plus $1 million. So you'll have a taxable value of $425,738 plus $1 million becomes altogether $1.425,738. And then you compare the two value. The new value of the replacement property was 1.75, and which is bigger than 1.425,738. And then the excess, the difference, you can see that this difference is $324,262. So you have to add this amount back to the taxable value, which was 324,262. You add them together, and it amounts to $750,000, which will be your new assessed value of the replacement property. So the replacement property will not be your 1.75 million, but instead will be 750,000, which is considerably less than what the current market value of the replacement property is. So still, that's a good deal, right? So, but then you have to live in the property within 1 year of the transfer. Okay, now it's for the base year value transfer. If you have a property that's $1 million, you can transfer all the $1 million to a replacement property without triggering any reassessment value. But if it's over 1 million, if it's over the current market value, then the excess, which is the overage, will be added back to the base value to become the new assessment value for the new property. So let's say that your current market value of the resident that you're living in is $700,000, and you are thinking of buying the replacement property of $800,000, and for all you can transfer all the $700,000 to the new property, but the excess, which is $100,000, you have to add it back to the base value. So you calculate the difference in the full cash value is $100,000 different. So you add it back to the base, which is the base. If the base taxable value of the base is 225,738, you add the $100,000 back to this value, become 325,738, which is a lot less than the $800,000 current market value of replacement property, right? So it's still a very good deal. So this is the beauty of the Proposition 19. You can transfer your base to a new property and with a hefty exemption. So when you're talking to your client and analyzing this, you explain it to them and let them decide whether that's good enough for them to switch a property or to upgrade the property or transfer the property to the kids, and can be all figured out in the Proposition 19. But remember, if you do as I mentioned in Albert's talk, when you're doing a trust and when you have both the trustee die, you have to do, when you do the death of the trustee, you have to do child to parent to child exemption at the same time. Otherwise, the assessor's office doesn't know. You know, they assume that you're transferring the property to third parties and without any exemption. So in order to preserve the Proposition 19 protection or exemption, you have to file that parent to child exemption. At the same time, you file the death of the trustees. Okay. Now, if you want to sell your primary residence to third parties, you're entitled to $250,000 per person. So if you're husband and wife, you are entitled to $500,000 of exemption for a couple. So and you can do it every 2 years too. You know, in other words, you can buy a new house, and then you can sell your old house and buy a new house with a $500,000 exemption for this old house, and then in 2 years you can do it over again and get the exemption. That is pretty good. So that's a pretty good capital gain exemption for your primary residence, and it's similar to that 1031 exchange for investment properties, because for your residence you cannot do 1031 exchange. Okay, so that's good, you know, right? And so all these the little things set up together, it's pretty beneficial for people who are over 55 years of age. But they don't know, and you know, most of the people don't know. So you have to explain to them, and then try to see whether that is feasible for them. Okay, and at their own tax situation. Okay, so I'll stop here. And do you have any questions regarding today's presentation? I mean, it's pretty simple. I just want to revisit that Proposition 19 in a very simplified version. Okay, any questions?
I have Pete. This is Val.
Hi, Val.
Yeah, hi. I have but the thing is also the people have to be told that there's a big capital gain. If they bought house 30 years ago or 40 years ago for $300,000-400,000, now they're selling it for $1.5 million. I know the $500,000 is there, but there's probably $5,000 in capital gain.
True. That is true. Yeah, but at least you will have $500,000. But if you step up, that's different. Now, if you both of the trustee die, and then you have a step up the whole amount, you don't have to worry about any of the capital gain.
Yeah, that is different. But this way, I'm saying over 55.
Yeah.
If somebody wants to change, I would do it tomorrow. But I don't want to give $400,000 away.
Yeah, that's why it depends on your individual situation. You know, whether you have accumulated a lot of.
Yeah, that's why these potential sellers will have to be told that, otherwise it will be lawsuit.
Yes, definitely. That's why don't represent to your client that you're an expert in tax. Okay, you always recommend them to talk to their own CPA who knows their tax situation much better, and to make appropriate decisions.
Yes, thank you.
Sure, yeah, welcome, Bob.
Pete, I have a question.
Yeah, fine.
So, say one of the spouses dies, do they still get the $250,000 credit if one of them sells?
When after they die, you know, when you sell the property, you only can claim $250,000.
Got it. Thank you.
You know, if you want to claim the $500,000, do it before one of them die.
Oh, okay. Thank you. Thank you, Pete.
You're welcome. All right. Anything else?
Good morning, Peter. This is Irma.
Irma, how are you?
Quick question. So for this transfer of the parent to child transfer, they have to occupy the property as a primary residence within the first year. Is there a requirement for how long they need to remain on the property?
At least 5 years. At least 5 years after the transfer.
Okay, thank you. And then one more question. When you mentioned that this can be done 3 times, well, how does that work exactly? Because the parents are only going to pass away once. So does that mean 3 different properties?
No. When you're trying to the base, transfer is when they are still alive. In other words, you want the replacement property.
Oh,
Okay.
yes.
Yeah, the replacement property, they can do it three times in anytime when they're still alive.
Oh, beautiful.
Not after they die. After they die, no more transfer base, and then, unless you step up the property and then give it to the kids. That's why you need a parent to child exemption.
Perfect.
And
Thank
then
you so much.
And also the step up, you have to claim your step up basis when the parents die.
When the parents die. Thank you so much. I appreciate
You're
it.
welcome. You're welcome. Anything else? If you have any questions, you're welcome to just call me up and clarify things, because sometimes it can be confusing, you know. When they first came out, there's a lot of confusion regarding Proposition 19, but now they are they iron out all the nuances and pretty much clarify the situation. So if you still don't understand it, you're welcome to call me up, and then I can explain it better to you. Okay? Anything else? Okay, if not, I would like to conclude today's meeting. Thank you all for coming, and thank you, Alba, for your very informative presentation. And I
Thank
hope you
you.
guys have a
Thank
very
you.
nice week. Okay, all
Thank
right.
you so
Bye,
much.
everybody.
Bye.
Bye, Peter, Michelle. Thank you.
Bye,
Thank
bye-bye.
you.
Thank you.
Very
Have a great
informative, Peter.
week.
Very
Bye.
informative.